It just so happened that the market just kind of petered out. It did manage to push down, but the breakout was not very big. It came very late in the session, way over here, and then we had the market push above the double top. So not all the time does the pattern work out, but the pattern was there. Hopefully, that's my point. Is you can see that the market had made. Let me make this big for you. Had made a very good pennant pattern right here, right back up into this area of resistance. Okay, that's the whole point there. So then this person goes on to say, however, I've noticed that you will often go to the 15-minute chart for the 3-bar reversal pattern. Absolutely. The 3-bar reversal pattern is an entry pattern. Okay, and I try and make that clear between the two. Let me give you hopefully a better explanation. I'm not going to sit here looking at the 15-minute chart and try and look for, like, I automatically see this channel right here. And I see that the market is trading inside of this channel. It's got some spikes outside of it. But this is a pretty good trading lane. But I'm not going to sit here on the 15-minute and try and trade that. You know, I'm not going to go over here. Let me see if I can get that low. There we go. Between this low and these two highs, you know, to try and make a trading lane on a 15-minute basis. I'm just not going to do that because I'm not focused in on the big picture. Even if I zoom out all the way, at best I've got like a week worth of information here. And that's just not enough. It's not enough information. I need to be able to look at the bigger picture. What some traders call this is a top-down approach, looking at the larger time frames going down to a lower time frame, but using the lower time frame, for example, the 15-minute, in order to get precision entries. For example, if I were looking to go short in this area, for example, like if I see, okay, I missed the breakout over here, and I see that the market is pushing up into prior resistance. So I have a reason for price to reverse in that area. What I can then do is go over here to my 15-minute bar. This is the close of the bar, so we've got 1, 2, 3, 4. Okay, there's the open of the bar. Now I'm talking specifically about this one right here. So the market is pushed up, 1, 2, 3, 4. There's the prior hour, big bar, big, lots of volatility. So now I start looking at the 15-minute bar and asking myself if, and here comes this whole idea of the if-then again, if the hourly is reversing, then what will I see on the 15-minute? What will I see? If the hourly is going to reverse, if this chart over here, okay, remember, let's pretend now. Let's go back to pretend land. Remember when you were a kid and you could sit around and pretend? Hopefully we all remember that. I vaguely remember it. If we're pretending that we can't see any of this on the chart, and this hourly bar right here is not done forming yet. Okay, let's pretend that is going on. So let me just move this over. So we see that the market's pushed up. This hourly bar right here is closed. This is what we're going to look at on the 15-minute chart. So what do we need to see over here that's going to tell us that eventually this hourly bar is going to close down? Well, first thing that we're going to see